Oh, really? Okay.
Oh, yeah. Video later. But we have 15 people on, so let's get going. So welcome everybody to the Startup CFO series of fireside chats. So I'm Guy, I'm your host and one of the founders of Startup CFO. And we are starting this exciting series with one of our members, in fact, who has a very interesting story to tell. And that's Paul Lehair, who's joined us here this evening. And Paul has a fascinating journey through startup world with Citymapper to his current role as a VC with Albion. So welcome, Paul.
Hi, everyone. Hi, Guy. Thanks for having me. It's a pleasure to be here this evening with you.
Cool. Perfect. It's great to have you here, right? So it's a brand new format for us. It's a sort of informal dialogue. So we're probably feeling our way a little bit here, but it ought to be fun. And it's about a 45-minute fireside chat, as it were, and we can allow 15 minutes for Q&A at the end. So if the attendees wish to drop any questions they have into the Q&A feature on Zoom, we'll pick some of those out and allow people to read out their questions, and off we go. So Paul, to get started, you know what, I chose to take a little trip down memory lane. I checked when you joined the group, right? So we're at 650 members. And you joined in 2014. So do you know what number you were?
I don't know. I guess maybe around 15 or something like this.
Close. You were 21.
Right. Okay.
Number 21. Yeah. So
I remember you reaching out. Yeah.
Well, that was back in the day when we were like a exclusive invite only type thing, which was fine for a bit, and then we realized that there was a better way of doing this. But yeah, so you've been like a long-standing member of the group. Always thought Citymapper was a super interesting business. I mean, like everybody knows it, uses it, and feel that they have an understanding of it. So I mean, like, how did you end up, like, in your career, weighing up startups, thinking about tech companies, and then, you know, how did you pick such a great business?
Yeah, no, great question. I guess maybe just starting a little bit from the beginning or earlier on, but first I actually remember, as I said, you reaching out. It was, I don't know how you found me, but you found me pretty quickly, because literally I think it was in my second week I got an email or LinkedIn invite from you saying, you know, we're a group of FDs, we're doing a meetup soon, would you like to join? And I remember we had this meetup at this pub in Mayfair, I think, where there was a speaker to speak about, I think, BI or data analytics.
Andy
or something.
Kirk, who does the visualizing data stuff. Yeah.
Yeah, so it was quite fun, and had a few beers, of course. Ended up also going for dinner, so met a lot of great people already back then. And yes, that was the good times of when we could do offline meetups. Hopefully we can go back to that at some point. But
we hope so.
Anyways, so yeah, but to go back to, I guess, kind of my story, just briefly. So originally I'm French, as people will guess from my accent, but I've been in London for quite some time, for about 12 years now. Always worked in London. Basically, I started my career in banking, M&A. So basically always worked around tech, but first I started in banking, in M&A, you know, covering the tech sector, working for large tech corporates, but working across the broader TMT sector generally. Did that for a few years and really liked tech in particular and in the internet sector. And this was around 2012. So there were more and more startups, you know, coming up around Wall Street and the Silicon, you know, roundabout. And I felt like, yeah, I wanted to do something more operational and move to basically startups. And so I was looking for opportunities to move to startups and talking to VCs actually at the time. And Martin Mignot, who's a partner now at Index, we had gone to the same university in Paris. And so he told me, you know, why don't you check our website, the Index Ventures website, because we list opportunities, job opportunities in our portfolio companies. And so that's how I found a role, business associate role at Viagogo. And I ended up joining Viagogo. So Viagogo is a ticket marketplace where people can buy and or resell basically tickets for any types of live events, sports events, football matches, concerts, theater events. And so I joined them as business associate, was doing various things there, but basically reporting to the CFO. It was quite a operational role. I describe it as kind of a business consultant. So working on various projects. First started working with the supply team, doing things like setting up the KPIs, creating dashboards to track kind of various metrics. Also kind of, setting up the targets, things like this. Optimizing also kind of processes. So quite a change, from the banking days where it's much more, high level. Here was much more being in the muck, but quite fun. I ended up working across various kind of sides of the business. Also worked on payments and logistics, payments and shipping. And then basically ended up managing actually my own team, also an own team in corporate sales. So Viagogo, basically, as a summary, was quite fun, but it was already quite a big startup or a scale up of a few hundred employees, offices across several countries, and it was definitely fun to be part of that. But I wanted to do something kind of more early stage, like a proper younger startup, and so I was looking again for opportunities at a more early stage. And again, actually talking to VCs, I had connected with Pietro Bezza, who's a partner at Connect Ventures, the seed VC, and who invested basically in Citymapper right at the beginning. And so, I asked him, do you know of opportunities in your portfolio? And at the time there wasn't. This was the summer of 2013. So yeah, more than 7 years ago. And he reached back at the end of the year, basically when Citymapper was looking for one of its first business employees, ended up joining as CFO. So that's a bit the long story of the journey, basically, how I ended up at Citymapper.
In that pattern, right, where you've kind of been able to ascertain the sort of tech ecosystem, like these seed investors, VCs, they're able to sort of interesting businesses are on their radar, and you're able to kind of meet those people and have a dialogue with them, and they can understand what you've done, and that you'd be a commercial person to add value. Has that been a key thing for you, where you've been able to sort of use those people to help sort of navigate your way?
Yes, I think so. So I was a bit lucky, I guess, that I had some existing connections, but also back then, I guess the ecosystem was a bit smaller, and people, if you kind of literally cold email Pietro, and it was quite nice to agree to go for coffee, and because I was also still quite young and fairly inexperienced at the time, but we had a good chat. I guess I tried to make a case of the experience I had, a combination of kind of banking and more operational at Viagogo and startup, and was looking for more early stage startups. So I mean, yeah, what's quite nice, I think, in the ecosystem, people are willing to have a chat if you can show that maybe you have also some things to offer, or for them on their end, and people are willing just generally to help. And I try to do so also on mine when I have people reaching out asking for advice. Obviously, you can't necessarily always talk to everyone, but always try to at least reply. So it's nice that people, I think, are willing to chat.
Yeah. Cool. And like when you arrived at Citymapper, so I guess your previous role was more growth stage, and so many of the processes, etc., were kind of in place, but they needed to be optimized. I mean, I'm guessing at Citymapper there probably wasn't that much.
No, you're right. It was definitely a very different stage, and it's what was exciting too. It's what I was looking for, I think, to be there nearly from the beginning. I mean, it wasn't exactly the beginning, but it was still quite early. The team was about 7 people, I'd say, and it was mainly technical people. Asmat, the founder, and a team of developers and one designer. So Omi Nashtari, who joined basically as general manager, effectively kind of COO, and me as FD, we were the first 2 commercial guys, non-technical guys to join. So yes, that was much earlier on. There was no finance team or no finance person. Asmat, the CEO founder, was effectively doing the finance side himself with the help of some external accountants. So what was exciting is that is the opportunity to create kind of the finance functions and various things also from scratch, not just finance, but in other areas as well, kind of legal, HR, operations. So, and helping to scale the team, grow the business. So you definitely have more ownership, and but it's also harder because you need to figure things out. a bit on your
but
own.
it's kind of fun, right? It's kind of fun to be the first person who encountered those things, right? And like, I guess that you'd already built up a, a sort of commercial background, looking at the metrics and things like this. I mean, how did the metrics look when you joined, right? Was it around the time it was really taking off and people were really using it a lot, or was it earlier than that?
Yeah, so it was, to be fair, I was a user myself, really like the product. I always liked, generally maps and transport. And so, really like the product. So when Pietro at Connect Ventures reached out to say, Citymapper is recruiting, I thought, okay, great. I already really like the product. So it was not, again, like the complete beginning. There had been, seed investment, and actually we joined just at the time of the Series A, so I didn't really work on it. It was basically already done. So it wasn't, completely small, but still in terms of team, still quite small, 7 people. And in terms of cities, it was basically just London and New York, and they had just launched 2 new cities, Paris and Berlin. So we were starting to basically expand internationally, but still quite early. But in London, people definitely knew it already, not as much as now, but in particular within kind of, I guess, the early adopters, the tech ecosystem startups, it had definitely already quite a brand. It was already quite known, probably not as massively adopted as now. So the numbers were, already quite good, but not as massive as today, I think. And then basically in the next stage, we continue to expand. So and in particular on the international side, went from 4 cities when I joined to 40 cities in 20 countries. So always focusing on actually large cities with complex, basically many mobility options, ways to go from A to B. So that was kind of the focus and the strategies, rather than going everywhere. And so yes, that's basically what we were doing.
Yeah. Like it always looked like an amazing business. It looked like a great business for people that love data, because essentially you're sort of shaping these kind of millions of data points and making them sort of useful for the man in the street. Like, really building a sort of compelling product that would change your life each morning as you found a better way to get around. So it was always really impressive. But I think the thing that struck me as a sort of observer of many startups was just how long you guys were comfortable to go without any apparent revenue streams. I mean, how was that dialogue internally?
Yeah, so you're right. So you asked about metrics. So metrics were definitely good and quite big already in terms of user base and growing consistently. The engagement also was very high. So in terms of daily use cases, basically, so it was never just obviously a monthly app. Most people would use it on a weekly, even daily basis. So very high kind of engagement, retention. So all these metrics were very strong and good, and the user growth as well. But you're right that in terms of on the financial side, it was still pre-revenue, and we decided to keep it this way for some time. Obviously as a kind of the finance guy and FD, you're a bit nervous, like you probably wish that we started a bit earlier in some ways. But I think it's more, at the same time, it's more rare that we have that in Europe. Startups going for growth and postponing monetization. Obviously, it can be risky as a strategy, but I think it's interesting to that we see more startups potentially. I mean, it's still quite rare in Europe, but doing that compared to what happens in the States, where you have more of these plays of going first for growth, and in particular in B2C kind of products like that, building the user base, and once you have a big scale, you can monetize through various ways. So that's what we were trying to do, and constantly obviously innovating also on the product. Like Citymapper was always a very product-driven company, very innovative on the tech side. It was always built by engineers. So from that point of view, also similar in terms of, I guess, mentality approach to companies like didn't get as big, of course, but like similar to Google or Facebook, of going for growth and being kind of product driven. So there was not necessarily tension, but it was just something that we agreed to postpone and focus first on the product, again, kind of innovation and the international expansion, going from 4 to 40 cities again. So just that also helped expand the user base and grow the user base further. And just in London, there was still also a lot of room to grow and to increase the penetration. I mean, just the greater London region is obviously 10 million people. That's just, it's massive. And still now I think that they have good room to grow, because not yet, everyone uses it, although, nearly everyone, at least in our circles.
Yeah, it's mainly sort of younger people, right? So,
yeah.
Your grandma's not using it, but
yeah.
That, right?
Although some are getting there, I'd say, but yeah. So I mean, we can talk about then, the journey we went on, but long story short, yes, we kind of postponed it. And since, the other metrics, so, obviously on the financial side, it was fairly simple, I'd say, I guess, as FD was mainly cost for some time. But that being said, we always had in the back of our mind that, we wanted to build a sustainable business and big business out of it. It wasn't just going for, a sell play or, a acquire play or something like this, but it was more like building the user base first, and then, we'll figure it out later. But we were in parallel, running various scenarios, thinking of various streams to launch at some point, and that was the focus. And since, again, the metrics were good otherwise, we managed to continue to fundraise on the back of that, basically.
Yeah. And like, was it that confident that you could always fundraise even if you were monetizing later and hadn't actually monetized yet, that you felt sure that because your kind of penetration growth over the 40 cities ultimately was so strong that you would still be backed? It didn't matter that you were, presumably burning through money at this point.
Yeah, I guess, I mean, again, remember when I joined, it was still fairly early. I mean, it was around Series A, so not super early, but still quite early. And so, obviously you can't do that forever unless you're able to demonstrate, extremely high growth. But when you're doing transport, and focusing on certain number of cities, you're not going to build, a Facebook in terms of user base. Of course, it's not a social network and or an Instagram, or at the end of the day, you need to be based in these cities. So the addressable kind of a total population that can use it is kind of more limited. But still, there's still massive cities, and just those can be quite a big user base. And I think, yeah, one thing that's also worth flagging is that Citymappers always managed to build, this growth and this user base by, never spending a dollar on marketing or advertising. So all the growth was basically by word of mouth, by referrals, by,
I didn't realize that. That is amazing. Yeah. Really never spent a penny on marketing. It was all viral.
Never. I think to this day, they still haven't. I mean, if anything, maybe should have been a bit more now, but it's always, literally $0. So it was, only viral, through virality, people referring it to each other, the word of mouth, so organic growth basically. And so the burn was quite low. It was a very lean company, still a small team, expanding to 40 cities, and it was just basically, until Series B, it was 25 people team. People were always surprised by how small the team was and what we were achieving in terms of scale and user base. So it wasn't, our burn was quite low, although we were not monetizing or generating revenue. Our burn was quite low. It was just the team and the office, and that's it. We're not spending anything on marketing or advertising. So that also helped, of course.
And I mean, like, I guess as kind of bumps in the road come, having a pandemic is a pretty big bump for something a bit like Citymapper, right? So, it's probably a fairly kind of a challenging window right now. But if you were to sort of pan things forward 3 years, 5 years, think of its potential as maybe a business that would ultimately list even. I mean, like, what do you think the opportunity there is in terms of revenue? Like in terms of pure revenue, where do you think it ends up? Like not in quantum, but in terms of which sources end up being big.
Yeah, so maybe to answer this question, we can talk about the monetization journey. And I see you're frozen on my screen, so hopefully you're still there or can hear me okay? Okay, great. But so because, although in the first years we were pre-revenue and so not monetizing straight away, we did end up, then monetizing, and right now Citymapper is, generating good revenue. So it has kind of basically passed that stage. But I guess very long story short, because it's quite an interesting one, but what model we ended up going through. We started first and kind of followed a bit, the product trajectory of the company. But we started by launching kind of a affiliate revenue, basically, essentially having, you could book your cab in the app. We first integrated with Halo in London, and then later on with Uber, and then other various ride sharing or e-hailing companies, and now they have kind of other partners as well. I mean, over the years, what's been also very interesting is that mobility has become more complex and more fragmented, if anything, which is a great opportunity also for Citymapper, because you have so many new options. You have car sharing now, like Drive Now, Zipcar. You have all the new micro mobility options, the scooters, the e-bikes. So many providers anyway that are all integrated in Citymapper. But so we first kind of started kind of monetizing through affiliate, basically. So essentially linking to their app and monetizing some of that traffic, which was quite good, money without doing much on our end besides kind of integrating and building the product. But I guess to build a business out of that is a bit maybe harder, and because it doesn't scale to necessarily huge numbers, although that's good money. And so we're thinking of what to do next, and tried to say it in a fairly succinct way, but went through various stages. And so at first we always we had actually, I mean, some of the things we were doing that Citymapper is doing that people don't necessarily realize, that's quite proprietary, is that Citymapper, aggregates a lot of data, open data. So that's kind of free data provided by the authorities. But even that is not that easy actually to do, because you need to aggregate data from various sources, and also open data is not sufficient, because you typically need to maintain it. You need to fix it. Also, Citymapper kind of creates its own data. So there's quite a lot of background work that's done that people don't necessarily see. And on top of that, obviously, it has its routing algorithm and all this. So, but basically, long story short, like Citymapper, has built some internal tools to kind of fix and maintain this data. And so at some point, we were thinking going more into a B2B play, potentially by monetizing these tools, by selling them potentially to transport operators who needs some of these tools in some cases, or city authorities to basically being able to build their own data, open data in some cases. So this could have been an interesting play, but it would have been quite a different DNA for the company, who's typically, I mean, obviously historically a B2C company. So we kind of considered it, but in the end, didn't really go down that route. But we kept on exploring ideas of what to do with the data just generally. And so and because one of the great assets that you mentioned it earlier that Citymapper has is it aggregates data, and the fact that it has a huge user base, and it can find out basically what the demand of transport within cities. And so we thought at some point, how could we monetize potentially this data, maybe sell it in aggregate or through tools to operators or public authorities. And what we ended up doing actually is launching our own transport service, which was the Citymapper bus, by actually yeah.
But I mean, it must have been amazing, right? Because what you just explained really is that at any given moment you could have gone into a B2B revenue stream and sort of sold the data or the tools that you got from working with the data back to the transport people who presumably under normal circumstances have got decent budgets to spend, right? So at any moment you could have kept it free for users and still had a very nice B2B revenue stream. But of course you've got the ability to sort of aggregate all of those transportation solutions. And I guess with the range there is now, that does sound appealing, right? To not have to jump between apps, depending on if it's an e-bike or a scooter or a cab.
Yeah, exactly. I mean, Citymapper is effectively kind of the front end to all mobility, and is a great, aggregator of all options in a city. And again, mobility has become kind of more complex with all the new options. But yeah, just to go back, briefly to the previous point. And so, by like aggregating all this data, we're able to figure out potential, gaps in the supply of transport. And so we ended up kind of launching our own kind of bus line at first, and then our own kind of rideshare service, which was quite fascinating, and we learned quite a lot from it. There was, also quite a different type of company, much more operational, and then you're competing with obviously kind of the ride sharing guys, the well funded, and we did quite well in it, within it, learned quite a lot, but unit economics can sometimes be a bit challenging, as we know, with Uber and all these guys are still figuring out how to make money, and it requires quite a lot of capital to scale it. So as basically the final stage of where we got to is actually the company ended up launching a transport kind of subscription, which was kind of a natural extension of that. But we're thinking, what else can we do is and what we were discussing is, to effectively, bundle all the transport into a kind of a transport subscription within cities, and the Citymapper ended up kind of launching Pass, which is a weekly transport subscription through a card that's issued, a contactless payment card that's issued by Citymapper, that effectively bundles, public and private transport using, it's the rideshare service that it still had at the time, but also public transport, all the cycles, all into kind of a weekly price. And so that's kind of the main model. It, ended up basically going for, and when I left, that we were looking to scale. And that was actually a very interesting one, because very scalable, great kind of a recurring revenue streams, because you get basically weekly revenue from people, and it's quite high ARPU. People obviously when you spend 30 to 40 pounds per week, it's, very high, like thousands of revenue per user. So just with a few thousands of users, you can reach high revenues, numbers quite quickly. So without going too much into the details, that's actually quite an interesting business model that we ended up kind of going for in the end, that we were looking to scale.
Yeah, amazing. And so, like, you were there like 5 years, so you literally went from being you and like 7 or 8 developer type people to like this fully fledged high ARPU bundled sort of travel offering 40 cities. Must have been quite extraordinary, really. And I struggle to think of other UK based startups that have achieved that. So amazing to be part of that. To be frank, I'm rather envious, really. So at some point you begin to think about life after Citymapper, and there you are now, VC, Albion. Tell us a little bit about your thought processes and why you chose Albion, and why that transition was interesting for you.
Yeah, sure. So yes, I spent over 7 years in startups, and was really overall enjoying it. It was definitely a great experience. But since my original background was in finance, I was a bit missing that side of thing. I guess after 7 years in startups, which sometimes feels double, as people, as all of us, working in startup. Well, I no longer do it right now, but no. And so, because as I described it, it's very micro. You're a bit working on one particular project. I guess I missed a bit. I wanted to switch to a more kind of macro view, having a bit more variety, working across different companies, potentially different sectors. I didn't necessarily see myself following the CFO path. So I always thought, at some point, trying basically the VC investor side would be interesting. And so this opportunity came up to join Albion. And I really liked the team and what they were doing. And so joined them basically a bit more than a year ago now, in the summer of 2019. And so I guess, just to say a little bit more about Albion, what we do, and what I guess attracted me to them is the fact that first that they've had quite a long history. They were created originally 25 years ago. And so although my experience was in B2C, Albion focuses on B2B software in particular, and some marketplaces. At Series A stage, we invest typically, 3 to 5 million first tickets, and then can increase up to 10 million per company. And focus in the UK also in terms of geography. In terms of subsectors within B2B, we've done quite a lot in fintech, in cybersecurity, data analytics, digital health, and so some marketplaces as well. We have about 50 companies in the portfolio and 500 million under management. So yeah, really like the team in particular. They're good guys. Of course, I'd say that, but really straightforward, down to earth. No kind of big egos as you can have sometimes at some of the VCs. And yeah, experienced guys that know their stuff well. And that's kind of what attracted me to it. And I liked also kind of the B2B focus, which is, different obviously from B2C, but there are, some kind of things that you can draw from it. And it's, yeah, interesting focus overall.
Yeah, and like in the sort of 18 months or so you've been there, how have you found like transitioning? So like you were building like financial, commercial, operational skills when you were at Citymapper, right? How does that stuff, like, how do you take that stuff and make it relevant for life as a VC?
Yes, it's true. I mean, it's definitely a very different job. So some things are yeah, there's definitely skills that you can, transfer. Obviously, especially when as an FD, you deal with investors, with VCs, either through, on some of the boards you might join, or, through the investor updates, investor relations, or more directly when you fundraise and, pitch them and then do the process, the DD. So all of that is obviously very relevant. You're just basically doing it kind of on the other side. So that's quite good, but the job is definitely, I guess some of the common aspects are it's both busy and very fast paced. I'd say it's quite varied. I mean, at a startup as an FD, you worked on various things as well. Some of it might be operational finance, some more like strategic finance, the modeling, the fundraising. You might have to recruit people to manage them, work also on the operations, HR, legal. I mean, so many various things. So it's definitely quite varied. On the VC side is varied too, but in a different way. It's more like you work, across companies, across different subsectors. And the job is definitely quite different. I guess there are various aspects of it that vary quite a lot from what you do as an FD. I mean, one part of it is essentially nearly kind of a sales job. You basically out there meeting a lot of people, of companies, building your pipeline of effectively, companies, opportunities, networking also with other VCs. So it's much more, outward focused than the job of an FD from that point of view. And then, when you work also, when you analyze kind of an opportunity or a company, here, I guess you draw on some of the skills that are kind of more analytical. You need to be able to review kind of numbers, of course, quickly, but also just generally form a view about maybe the market, the value prop, the problem that the company is solving. And then the third aspect is more like process management, or project management. You're basically doing the deal, executing it, and this again is very similar as what you do as an FD, just basically being on the other side. And I think having the perspective of the startup side, the FD side, hopefully is helpful, can help in negotiation, or just generally understanding kind of the other side. And the last side, the last aspect of the job, I'd say, is more, I mean, it's basically being on the board, like helping the companies, the portfolio, working with them, supporting them in various ways. And there, I think you can also hopefully draw on your experience as an operator, what you've done, and kind of giving concrete advice, but based on things you've gone through potentially. At the same time, you have to be careful, not to over-index, I'd say, on your experience, because things vary and are different, and you don't want to be giving lessons obviously to people, but hopefully what you've gone through, I think teams like to see people that have also operators experience on the VC side, because interestingly, when you look at it also, I think only 10% of VCs in the UK have startups experience, which I find quite low. I'm surprised it's still that low, but I think I've seen that in an article. It might not be as low still, but yeah, it's quite low overall. Yes. While in the US, it's 60%. So, I think it's hopefully good that more people with startup experience move to the other side.
That sounds like probably some of the portfolio kind of reach out to you because they maybe know that you've been kind of broadly in their shoes.
Yes, exactly. I mean, hopefully, and even concretely, you might know people to help them. Actually, a very concrete example, but one of our portfolio digital health company called Umotive was looking for a new FD CFO. I posted the job on the Slack group, and Prakash is joining them and starting soon. So that's an example where you can leverage kind of your bit network and then the people in the ecosystem and help with recruitment, for instance, or other things.
Yeah. I mean, it's amazing how that's working so well. So I've got two questions actually. So firstly, because you've done the CFO job and you were owning the model at Citymapper and you structured the P&L, all this kind of stuff, when you've got a portfolio company, are you the investor who is like, no, this is how you should do your P&L, this is how you should do your model? So that's the first one. The second one is Citymapper. So you own one startup for a fairly long period of time, right? Not many people do 5 years. Do you, when you're looking at pitches, do you have a tendency to think, oh, that reminds you of some things at Citymapper, so that will be a good one? Is there a little bit of a sort of little bias perhaps from your own experience that draws you towards similar investments?
Yeah, it's an interesting question, both. I mean, on the first one, hopefully, not too much. I mean, of course, you draw on some of your experience, but it's more I think, having been on the other side, you can maybe sometimes catch where some things, might be a bit too bullish or and some of the assumptions or some of the forecasts. So I guess it's interesting. There's a bit of a tension where, in one way, I think being an ex-operator, you have maybe more empathy and you may be also less risk averse and more bullish. But at the same time, you've been there, where sometimes maybe people inflate a little bit the numbers or make things look a bit too good. So you can try maybe to check that. So, but hopefully I haven't been otherwise, telling people exactly what to do or how to do it. And, I was still learning a lot of things myself. And if anything, sometimes I see some FDs or CFOs that have models that were much more structured maybe than what I was doing at Citymapper. And so I'm quite impressed sometimes by what I see from that point of view. But on the other side of your question, I guess, it's not necessarily that you compare directly versus what we were doing, but I was talking about that actually to my team earlier. But it's more you still get a little bit maybe your startup a bit spirit, and sometimes I guess one internal check I nearly do when I see an exciting company and I talk to them. And I mean, over time, whether, for instance, I'd be willing to make a case to invest is, I wonder would I even want to join them and go work for them full time. And if I find it that exciting, then I know it's a good sign, because if you're willing to basically put, all your eggs in one basket, which is what you do when you join, as FD, as CFO, as any employee, it means you really believe in it and you're really convinced by the entrepreneur, the founder, the vision, and the strategy. And so then it's maybe easier to, I mean, it's never easy, but investing where you're not exactly putting obviously all your eggs in the basket, it's kind of makes a good case for it, maybe.
Yeah, it's interesting, right? Because that means you're looking at it in a balanced manner, right? Because that's what people are doing when they take on those roles in startups is that they're saying, hey, look, am I going to bet 3 or 4 years of my life on this strategy, this founding team? It's not without some risk, for sure. Very interesting.
Yeah.
And like, I kind of think that with having had a boot in both camps, you probably have quite a unique perspective on the way that kind of pitches go. So like, the pitch is obviously key, and founders obviously, they do their seed round, they do their A round, and so they are learning what they're doing there typically. And it might be that the FD or the CFO is joining those things, but probably that person becomes a little bit more important to be in the room, maybe on the B round or the C round. As things are more commercially developed, it's more likely that there are financial questions. I mean, what recommendations would you have for FDs and CFOs when they kind of join the pitch and meet venture firm a bit like Albion?
Yeah, sure. Yeah, it's an interesting question. I think at the A round, we were talking about it, I think, earlier, but it's there's actually sometimes rarely a CFO in place or an FD in place. Typically, sometimes there is, of course, but often it will happen afterwards. And it's actually, one of the things we're quite keen to one of the first role we're definitely keen to recruit after we invest. So it depends, but if not for Series A, it's definitely even more relevant for Series B and C, as you say. So, and typically, yeah, the CFOs might not necessarily join the first pitch or first meeting, but if not, we'll definitely be involved in subsequent ones, or in particular when going through the numbers and forecasts and things like this. I'd say, one at least thing I can think of is when building your forecast and your projections, just sometimes there can be maybe a bit of tension between the CFO and the founder. That founders tend to be over bullish, of course, and as the CFO and the FD, the role is to maybe a bit keep things a bit more realistic and a bit more conservative, although that might be a bit less exciting. I think in particular when you look at your forecast in a more kind of granular way, and for the months where you're going to be basically fundraising and going through the process and the due diligence, then you want to be, I think, quite not too bullish, in the sense that you want to make sure you meet those forecasts. Because if you end up kind of being below the forecast, in particular below by quite a lot, it's obviously not great while you're in fundraising mode. So I'd say be realistic, and if anything a bit more conservative with those kind of forecasts. Because on the other hand, if you actually beat them, it's always a great thing to show to investors, like, look, actually we were projecting this much this month, we're beating it by 10% or that much, and same next month. That's always a great signal, and something investors love to see as they're going through the process. And either when you're still looking to get term sheet, and this helps maybe create a bit of FOMO and competition and excitement, or when you're just going through due diligence and it gives good comfort, and that's basically things are going well. So it's at least one thing I think I can think of in terms of the numbers and the projections.
Yeah, because you see that's part of the craft, right? Is that the founder is going to be in sales mode and is going to be excited about the future. And the piece where it's like, well, look, it might take you 4 months to close the round, right? You've got to be trading on plan, better than plan, near to plan at least, to give that sense it's all going well and it's a really good deal to land. So there's a bit of craft in making the near-term bit fairly realistic, and still giving you the exciting shape for the future.
Yeah, exactly. And to raise from VCs, you need to, at the same time, I'm saying conservative, but of course, you need to be able to show like very strong traction, and then strong year-on-year growth and an ambitious plan. If you're planning to grow 20-30% kind of yearly growth, or that's basically where you are, it might be good in some industry, but like at Series A stage for tech, to raise from VCs, at least kind of like us, it's basically not sufficient enough, as tough as it may sound. So it's important, of course, to still show ambitious kind of medium term, long term forecast, but in the very short term at the same time to have realistic ones.
Yeah. Cool. I'm just wondering if we should go to questions actually,
Sure.
Paul. The thing is, I'm hoping the Q&A function is working because we don't have some in. So
We're
if
trying it
anybody
live.
has a question, plug it straight in there. And if that feature's not working for some reason, just let me know. So I've got a question because I'm kind of intrigued by this. So in my personal experience of startups, like one of the key things is like how good's the team, right? So you've got founder, CMO, most likely CTO. You might have another couple of kind of like C-suite type people and COO type roles and things like this, and they'll join at different times, right? So they won't all sort of like start on the same day. It might be spread over 2 years or so. So how as the investor are you kind of feeling out those teams and sort of like looking at a business saying, look, it's a really exciting sector, but how can we feel sure that this is a great team?
About the rest of the team, yeah, it's a good question. That's where I think, if not in the first pitch, but having various, at least having potentially in the first pitch or in other ones, having other team members join can be interesting, and seeing the dynamic also between the team is always interesting. That's one of the things, by the way, that can be hard to evaluate remotely, as we're kind of doing remote pitches kind of now, or so that's always interesting, to see the dynamic in the room between the team, potentially, if hopefully more of them are joining. But I guess, otherwise, if you don't see the rest of the team straight away, obviously kind of looking at their creds, their background, do they have what type of companies have they worked for, if they have kind of sector knowledge, if it's a very specific sector, it's always great. Good experience at other startups, that basically means they've done the role before. It's always also a good sign, and gives good comfort. Sometimes, actually, in some teams, obviously it's not a prerequisite, but some teams have worked before together at another startup. That's always a great thing, obviously, that they know each other well. And if the founder is an experienced serial entrepreneur, experienced founder, he might be, or she might be able to basically bring his or her team from previous ventures, which is also always a great sign and a great thing. It means be able to execute him even more fast. So these are various things we would be looking at. But otherwise, if not in the first pitch, if we continue the conversation, we're excited, we would typically do more like thematic kind of sessions, one with the CPO on kind of product roadmap and things like this, one with the head of sales or CRO on go-to-market strategy, on the sales process. So the key executives would definitely want to talk to them at some point, if we're looking to, if we're seriously considering the opportunity to get a view on the rest of the team.
Yeah, fantastic. So we've got a couple of questions from the floor, and I'm kind of hoping Lamro is near to his computer. I'm going to allow Lamro to talk. Hey, Lamro. Otherwise, I'm going to have to read out your question. Hey, Lamro.
Hi, Lamro.
You're on the webinar, and you've got quite a complicated question, so I'm going to let you go for it.
Hello.
Hi, Lamro. We can hear you.
We can hear you.
Right now, we can't hear you.
He's got some headset issues, so I'm going to read it out. So, do you envisage a contraction in liquidity driven by the economic downturn, and which LP is going to be most impacted, and what does this mean for funding rounds in 2021 and beyond?
So, contraction in liquidity in terms of funding available to startups, or in terms of funds raised?
And which LP is going to be most impacted by that, and
LPs.
Will that have an impact for funding next year?
Yeah, I think there are various elements in that question, but I guess first, on the startup side, I think there's a lot of actually capital available. Like, lots of funds were raised in the past 12 months, and we still see more funds being announced, like Citymapper, for instance. One of the best or most famous seed VCs just announced a new fund yesterday. So even during the kind of crisis, we see more funds being raised, and other also funds were raised before. So there's a lot of dry powder, as people call it, available, and good startups with a good value proposition and good offering. I mean, good traction will continue to be able to I think raise good amounts. So I'm not really worried about liquidity. Also, if anything, tech has been booming and doing very well through. I mean, generally, obviously, it varies from sector to sector, but through COVID, which has accelerated digital transformation and various other trends. So we see it definitely, for instance, in software. With the move to kind of cloud and the SaaS that continues to accelerate, if anything, further. So yeah, I mean, long story short, I don't think there'll be any liquidity issues in particular for startups that are performing very well. And I think same on the LP GP side, basically VCs raising their funds. I think there's a lot of actually VCs right now raising and yeah, some LPs might allocate, less funds to VCs, but actually probably not, since again tech is booming and doing very well. I would see some willing to increase their exposure there. So yeah, not to worry about that. Basically.
Yeah, and like if you look at announcements, I think that's actually validated, right? Because we all saw announcements in April and May, but we knew that they were deals that were being worked on probably in January or February. We weren't surprised that they completed, but here we are in November, and there's still some like amazing announcements that obviously you would have commenced the process in May or June, and in a sort of normal recession, you would have imagined that maybe there'd be less of that. And there is something about this that isn't entirely normal, and certain sectors are seeing just like incredible, acceleration that is driven by lockdown, etc. Yeah, cool. So let's go for another question. I'm going to pick Nick Lally's actually. So Nick cheekily asks, how's the work-life balance being a VC compared to a CFO?
How's the work life? Yeah, it's a good question actually. So actually, I mean, not that I chose to move to VC to have a more relaxed life, but maybe a bit more naively, I thought that it would be kind of a bit more relaxed or easier than on the startup side. And I definitely still think that overall startups are harder. Definitely, obviously, for the founders and entrepreneurs who take so much risk to start companies and often have to make a lot of sacrifices in the first years, and a lot of mental stress and etc. that I think you have less on the VC side, unless you start your own VC fund where it's also basically a startup. So so I guess, yeah, less basically maybe mental stress about also kind of running out of cash and worrying about runway and things like this. But in terms of being busy, it's definitely as busy as on the startup side in a different way, but definitely super busy. And it's a very competitive space at the end of the day, which is great for startups, but there are, if anything, more and more VC funds also being raised. So once you're on the VC side, you constantly have to a bit stay at the forefront of new things coming up. The good deals are very competitive. You need to kind of fight to get your way in, to talk to the best companies out there. So it's definitely nonstop. Just always have things to do, like things to read, new companies to talk to. So yeah, it's quite intense actually.
Not quite kind of feet up on the desk, smoking a cigar.
No, it's different. Yeah, it's Eskimo. yeah, for sure.
It's kind of manageable stress, but still super busy.
Yeah, definitely. It's hectic as well in a different way. It's less fighting fires as you do when you're at a startup and building things, but definitely also you're constantly switching between and it's less switching between tasks, between domains, maybe as you do at a startup. Here it's literally switching between companies, between subsectors, maybe attending a board, like working with the portfolio, and then doing a deal or sourcing new opportunities, going to an event. So yeah, it is actually, it's not a relaxed job for sure.
Cool. Right. So let's have the last question. So from Freddie Dixon, what are the characteristics that VCs value in CFO? So, when you're looking at what you expect your CFO to like deliver, what are the things, what's the top three that you expect that person to be acing?
Yeah, it's a good question. I mean, one that's quite generic, but and basic, but having obviously a good handle on the numbers is like super key. Like knowing your numbers inside out, in terms of your various kind of metrics, your P&L of that. I think making sure you worry also obviously about, I mean, especially if you're loss making, and most tech startups at this stage will be, of course, but worry about kind of the runway, plan well in advance for that. I think also having, it goes back to what we were discussing earlier, but having also, so the planning, basically, number two, I say, is very important, of course, and having kind of various scenarios where, the bullish one is obviously great and important, but also maybe more kind of a conservative and more base case to see, what can happen if things don't go as well, so that, we're not surprised by, runway kind of being significantly, for instance, reduced or things like this. So it's I think another key thing. So I guess, so I mean, basically, if you look at the two main aspects of the, I guess, CFO job, or like the finance function generally, there's obviously the looking back, kind of the more kind of reporting. So obviously making sure all the numbers are kind of in good shape, and we understand, but also more importantly, I guess, we understand the key drivers of the business, what's driving performance. So having a very good handle on all the metrics is something that, I guess the best CFOs do super well, understanding all the metrics for like kind of also future planning, and they'll be also important when you fundraise your next round to have a good grasp on all of those first, having kind of identified them, tracking them well, and then ideally kind of improving them, helping like improve them over time. So kind of the first part is more reporting and metrics, kind of tracking, and the next one is more like forecasting and looking forward, and so having both detailed view and then but a more kind of strategic one, and being more forward looking, and being kind of the right hand to the CEO, and helping kind of, I guess, shape also the key priorities and goals of the business.
So that sounds like sort of like a metrics guru who's owning the planning, got a really good view on scenarios and runway, but also like a really good business partner for the CEO and the C-suite generally, and maybe less somebody who's like really good with the financial statements or that kind of stuff.
Yeah, I mean, it's so important as well, but ideally you have a bit of everything, but yeah, both both having good, obviously great attention to detail and knowing things like well inside out, but having also kind of the big picture and strategic aspect. If you can have both, that's great.
Yeah. Well, all of us at Startup CFO are hoping we can bring them all. That's kind of
you learn over time.
And doing things like this where we can better understand how like investors think and how people that have been super successful in amazing startups have gone about doing things. It kind of helps us all to keep on top of our game and understand what's key. So Paul, I'm conscious of time.
Sure.
Thank you very much. It's been a super interesting fireside. So applause from me for being our first guest and making it so much fun.
Thanks to you for taking the time and for organizing it. It's been a pleasure talking to you and the wider community, and thanks everyone for attending. And please don't hesitate to reach out, if I can have a help, even if you just want informal advice on VC side of things or fundraising. Always happy to have a quick chat.
Fantastic. Yeah, I'm sure Albion's door is always open, right?
Yeah. I mean, not only in a purely interested way, but just happy to help where I can.
Yep. Absolutely, absolutely. And then for Startup CFO, our next, we've got a series of events through the winter. Our next fireside chat is coming up in around about 3 or 4 weeks' time. In early December, we have Nick Lally taking us through the Ravelin Series C story. So watch out for the link for that one in the Slack group. It should be absolutely fascinating. Nick's been on the call actually. So looking forward to doing that with him. Just leaves me for thanking all of our attendees and members who joined this. It's been good fun. And Paul, thank you again.
Thanks guys. Thanks everyone. Bye-bye.